Welcome to the Probate Realtor Show, your one source for selling and buying real estate through trust and probate. Hear directly from the best attorneys and trusted advisors on how executors and administrators navigate the probate process in and out of court. Being a personal representative or successor trustee can be a daunting task, and often beneficiaries don't have a clear plan. Let us help you make the right decision for your clients, your family, and your legacy. And now, here's your host, the probate realtor himself, Matias Baker Mazzucci.
Hello, everyone, and welcome to our show. Today, we have a very special guest with us. We have Janice Cohen, who is a reverse mortgage expert. Welcome to the show, Janice.
Thank you for having me, Matias.
Okay, so let me just dive right into it so the audience can get to the meat, and then we'll move out from there. What is a reverse mortgage?
A reverse mortgage is a federally insured program that allows borrowers over the age of 62, and in some cases 55, depending on which program they choose, to borrow a portion of the equity that they have in their home and to receive that equity in the form of tax-free dollars. So there's no tax charged on it. It's considered a loan, but it's a loan that does not require repayment.
Okay. It does not require repayment. So meaning that when you sell the house, that's when it gets settled?
Correct.
Okay.
While you are alive and well and living in the house, you do not have to make repayments.
Got it. Okay. So the scenario is somebody owns a home. They have enough equity in it to borrow on it. Can they, if they have a mortgage already on it, can they get a reverse mortgage?
Yes, in many cases they can.
Okay.
What would happen is, let's say, for instance, a person has a $2 million house, and they're going to be borrowing maybe around $1 million on their reverse mortgage, which 50% of the equity or the appraised value is usually what a borrower can get, depending on their age. So let's say they owe $500,000 on their home. So we're going to pay off their $500,000 mortgage. And then they'll have either a line of credit or cash in their hand or monthly income that will amount to $500,000. Okay.
So the reverse mortgage, it's not just, there's different ways. It's not just like a monthly payment. You can also get it as a like a chunk.
Yes, you can get it as a lump sum. You can get it as strictly a line of credit that you keep for emergencies, or you can get it as monthly income. Monthly income could be in a certain amount. It can be for a certain length of time. I've had people call me because they have a spouse who's very ill and they need a lot of money every month, maybe $25,000 a month. But they know that that $25,000 a month isn't going to last the rest of their lives. But that is what they need right now. So they are going to get that monthly income so they can keep their spouse at home and they can take care of the care needs for their spouse.
Okay. So basically, somebody who's either, and we'll get into that in a second, 55 or 62, depending on the circumstances, has the ability to receive a monthly payment or a lump sum from their house as an option. It's like basically, but you don't have to pay it back because it's debt and it's tax-free, right? Because it's debt.
It's tax-free. It will be repaid upon the last surviving borrower leaving the home. So if you have a married couple and the husband passes away, the wife does not have to make a repayment until she leaves the home permanently.
Okay.
It's the last to die.
Okay. The last, or to sell. If somebody decides to sell the house, then obviously the mortgage gets paid off. So let me ask you this question. If somebody has a lot of equity in the house and they get it when they're 62, but they end up living until they're like 95, what happens when the bank says, okay, well, you borrowed, because I'm sure it's not infinite, right?
Not infinite. So my answer to that question is it depends on their utilization of the funds. So if they take out a big lump sum at the age of 62, their loan balance will have grown over 30 years.
Right.
And obviously, depending on what the real estate market is doing, they may or they may not have equity left in their home.
Right.
That's if they take it in a lump sum. But if they take the money in a line of credit and they use it only when they need it, then they may very well have plenty of equity left in their home. And I will say, I have seen people live a very, very long time having had a reverse mortgage. And because of the robust real estate market here in LA, they have plenty of equity at the end of the day.
Oh, very nice. Yeah, that makes sense. That makes total sense. So so the other question, who needs it? Who is the ideal candidate for a reverse mortgage?
It's such a great question. And I'm going to give you 3 scenarios that have taken place over the past 3 years.
Okay.
In the beginning of COVID, I received many phone calls from people who really needed care, were about to go into a congregate care setting, but because they didn't want to be cut off from their families, potentially, they made the decision to remain at home. They needed money to pay for companion care or nursing care in their home.
Right.
So they did a reverse mortgage to pay for that care. That went on for a full year. The following year, I was getting phone calls from people who were watching their assets under management experience volatility.
Right.
And they were very worried that they were going to outlive their assets. They were taking far more than their minimum distribution requirements. They were taking out their investments in record amounts, and the assets were depleting because the market was so shaky. Now, those people were saying, you know what? I want to give my assets an opportunity to recuperate with the market. I don't want to take out these assets.
Right.
Instead, I'm going to use the equity from my home. And now, just in the past 6 months, the phone calls I've been getting are from people who took out a home equity line of credit when the rates were low. So and I know that a home equity line of credit is generally not fully amortized for 10 years. Plus, it's a variable rate mortgage. So if when you took out that HELOC as an older person, you said, well, right now the rate is 2%. What's the worst that's going to happen? I'm going to have to pay a fully amortized monthly payment on 2%. No problem. Well, now the rates are much higher than 2%. So I'm getting phone calls from people whose lifestyles are being impacted because they are having to make much higher than anticipated fully amortized payments on their HELOC that has expired that interest-only period.
That makes total sense. Yes.
Yeah.
I understand. So this is actually very interesting. The fact that, when somebody, you never know in life when something happens and you need money, right? And, if it happens in a year where the S&P 500 is up 30%, you feel great. Yeah, I'm going to sell. It's going to make me so happy. Wow, my Vanguard funds are doing so great. But if it happens in a year when, like this year, where it's down 15%, or even worse, if you're in the if you're tech heavy, 25% down, people are having like second thoughts about saying, I don't want to sell my portfolio. And so the reverse mortgage is a good option. Now, does a reverse mortgage work in the same way in the sense of like rates? What is the interest rates on the reverse mortgage?
So our rates are dependent on the Treasury.
Okay.
And right now the Treasury is high. So our rates are high.
Right.
So
like everyone else.
Like everyone else.
Yeah.
And we anticipate that it's going to go back down.
Right.
Nothing stays, the same. That's the only thing you can count on. We know that it's going to go back down. So when we talk about reverse mortgages, There are so many different factors. There's interest rate, and there's the rate that we call the expected rate that tells us how much you can borrow. It's really a qualifier rate if you're, talking about a traditional mortgage. So we calculate how much you can borrow. It's not a firm LTV, like, oh, we can give you X percent. No, it's based on what is the rate, the qualifier rate, which is based on the 10-year treasury, the value of your home, and how many days until you reach age 100.
Oh, interesting.
So it's not a calculation I can do in my head.
No,
so sometimes I'll get a call from an estate planning attorney who'll say, I've got a lady, 72, $1 million house, and how much can she get? Well, I've got to go into my calculator. I'm very calculator dependent, but I don't ever want to make a mistake.
Right.
So I go into my calculator, and 1 week I'll get one answer based on whatever the 10-year treasury is. The following week, it could be a slightly improved answer or a slightly worse answer. One thing that I love about my company, I'm with Mutual of Omaha, is that we guarantee to our borrowers that if the rate goes down during the course of your processing, you will get the lowest rate. Thereby, you could potentially get a lot more money than what you even initially applied for if you want it. So that is good. Now, the higher the 10-year treasury, the less money a person can borrow. The lower the 10-year treasury, the more they can borrow. So what we are experiencing right now in the reverse mortgage market is almost unprecedented. We are seeing the rates are up. These loans are sold on Wall Street, just like every other loan that's done in this country. And right now, Wall Street is not very interested in reverse mortgages.
Right.
They're not very interested in mortgages in general right now, but it's having an adverse effect at the moment. But it does not stop people from wanting and needing a reverse mortgage because it's driven by lifestyle and options and needs. In Los Angeles, I'm from New Jersey. I started doing reverse mortgages in New Jersey. When I moved to California 13 years ago, I began to see the power of a reverse mortgage here in LA versus in New Jersey. In New Jersey, yes, you have multi-million-dollar homes, but much more common to have a home 400, 500,000 that people are going to be borrowing from. Here in LA, it is not at all unusual for someone to borrow on a house that's $5 million, $3 million. The borrowing power is serious and life-changing.
Of course. Are there any income limitation? What I mean to say is that, you have age limitation, 55 or 62. Oh, by the way, before I actually get to that, what's the difference between 55 and 62? What's the reason why?
So 55 is for the jumbo proprietary program. And as you can imagine, it's for homes 1.5 million and above. And right now, the vast majority of the loans that I do here in LA are the jumbo proprietary loan. It is called, well, we have a couple of different programs, but the floor age is 55 for that program. Then for the FHA reverse mortgage, the floor age is 62. And both programs have the same exact protections. The FHA reverse mortgage is the gold standard in terms of consumer protections that are delivered
just
to
like
the
with
borrower.
Standard mortgages, right?
Exactly. But what makes the FHA reverse mortgage the most special is that it is a non-recourse loan. So even if you have that 92-year-old lady that you were talking about earlier, who's taken out a reverse mortgage, and now her loan balance is higher than her home value, we will say, okay, let's do a short sale or a deed in lieu. It's a non-recourse loan. The heirs do not have to bring one red cent to get out of this reverse mortgage. Same with the proprietary program, even though it is not an FHA insured program, in the note itself, it says this is a non-recourse loan. There's no risk to the family of having
Very
to
good.
bring funds.
That makes sense. Very, very nice. Now, when we think of a mortgage broker, we have a tendency, it's either somebody who works specifically for a bank or somebody who shops around, like, I guess, loan originator and whatnot. In your case, you work for the bank, right?
Yes. Mm-hmm.
So you don't, like, somebody doesn't come to you and say, I need a reverse mortgage. You can say, well, let me ask this bank, let me ask this other bank, you are part of the Mutual of Omaha, as you said, so you have the products that the company offers.
Correct, but there's only one FHA reverse mortgage, and there are only 2 proprietary programs, soon to be 3. Okay. And one of the largest lenders of the proprietary program just filed for bankruptcy. It was in the news. Oh. It was a company, many of my friends worked for that company, who I've known for many, many years. So it was very sad, but we have a proprietary program at Mutual of Omaha that has been very well underwritten. It's a well-designed program that we feel is sustainable, because I'll tell you, other companies may come up with a fly-by-night proprietary program, but like this one company that just went out, if it's not sustainable, it's not going to help anyone.
Right.
And that's what we're seeing, is that sometimes these programs have to be a little more conservative than maybe would have as wide appeal as you might like, but it has to be that way in order for the program to be there in 5 years, in 10 years.
That makes total sense. That makes sense. Okay, now let's talk a little bit about you. Where are you from? You said are you from New Jersey, or do you move from New Jersey to Los Angeles?
Yeah, so I was born and raised in New York City, right in Manhattan, nice. The Big Apple. And very so nice. I had a very fun childhood there. All of the things that you think of about New York City. I rode the buses by myself as a child, went to museums, a lot of fun things that only city kids really get to do. Of course, there are plenty of city kids here in LA too. But then we moved to New Jersey. A part of New Jersey that's very close to New York City. My husband worked in New York City. The commute's only about 30 minutes, but he was transferred from New York to Los Angeles. He works for Warner Brothers for the past 37 years. Oh, okay. So we said, okay, I guess we're going to be Angelenos now. And at first I was very skeptical, because I thought, I'm a New Yorker. I'm never going to be an Angeleno. But you know what? After a couple of years, you're like, this isn't too bad.
Exactly. I'm a big fan of LA. Okay. Tell me about your journey to reverse mortgages. When did you start, and is this always been your career in banking, or is this a second career?
It's so interesting that you asked me that, because it's a very crazy story. I had a different career for 25 years. Okay. I was a cantor in a synagogue in New Jersey. It was a Reformed synagogue, and I have a master's degree in cantorial music. So I certainly didn't train for a career in banking. But as a cantor, I sang at services. I led a choir. I trained bar and bat mitzvah students. So it was a very interesting and a career that I loved very, very much. And a few years before we moved here, one of my neighbors who worked for Wells Fargo said, oh, you teach the seniors at the synagogue, and we have a new division in our Wells Fargo office. It's called Reverse Mortgage. And he said, you should come and meet our manager. And he invited me to the office, and I saw the program, and I said, this is a really impactful way for seniors to have a sustainable future using their home equity, because so many people are on track to run out of money. And it's very heartbreaking, because, people work all their lives, but life is expensive. There's inflation. Care in the home is very expensive. So I was invited to join the reverse mortgage team in New Jersey, and I did. And I worked there for 4 or 5 years before my husband was transferred. So when we got here, I said, I'm just going to continue to do the reverse mortgages, no more being a cantor, because after 25 years, I had taught my last 13-year-old kid. I was ready to move on from that, but it was a wonderful career.
So you were at Wells Fargo and you stayed with Wells Fargo when you moved to LA and then switched to Mutual of Omaha?
Well, actually, I was with Wells Fargo until they closed their doors on the reverse mortgage program.
Okay, got it.
And then I switched to MetLife until they closed their doors on the reverse mortgage program for completely different reasons, by the way. And then I went to the company that is now Mutual of Omaha. We were acquired 5 years ago by Mutual of Omaha.
Got it.
And it's been a wonderful, I've been with the same executive team. They're like my family, really. They're wonderful.
Very nice.
People.
Very nice. So when you worked as a cantor, you were in contact with a lot of seniors, right? That was
Yes.
okay. So you saw firsthand how a product such as a reverse mortgage could benefit certain people.
Yes.
So then when you came across the program, you were like, okay, there is a need out there. I know it because I know the people, I see the people every day who are like in those circumstances. And we know that Social Security is hardly ever going to cut it for anybody. So unless they have a strong pension that is, or enough saving, obviously, to live, that is a good option. Very interesting. So you saw a need and you saw an opportunity to fulfill that need. And tell me a little bit about, how the process works, just to get into, I don't want to get too technical, but, we are familiar with the typical mortgage. We get an appraiser comes out, the underwriting process and everything. With a reverse mortgage, obviously you don't have a purchase contract. So people are, they're not buying the house, but I'm assuming the bank is still requiring the home to be appraised, right?
Oh, yes. So the very, very first step in doing a reverse mortgage, and this surprises a lot of people, there is a required consultation with a representative from the Federal Housing Administration who is contracted to be a counselor for seniors to make sure that they fully understand the program and that they can get their questions answered by the counselor if I have not sufficiently answered their questions. They want to make sure that everyone is really understanding this, consenting to this. No one is forcing them to do a reverse mortgage. Like if a child comes to them and says, do a reverse mortgage, I want to start my own restaurant and you can give me $200,000. No. Right. If someone says that to me, I would counsel them. What about the other children? Is this something you really want to do? Right. You've heard of the old adage, if you're on a plane, put your own oxygen mask on first. So there is counseling on the part of the counselor. I counsel my clients to find out really what's in their best interest. I have turned away many, many people who've come to me for what I think is not a good fit for them. People who have maybe have their money mismanaged, maybe family members have taken advantage. They have a house full of adult children who have not launched and who are really looking for a handout. There are lots of circumstances under which a senior is really best off selling their home, even if it means paying a little long-term capital gains, which, we look at everything, in the picture, including long-term capital gains. And as you can imagine, here in LA, if someone buys their home for $200,000 in 1970, and it's worth $4 million in, 2022, they could end up, paying $1 million in long-term capital gains. And so sometimes it makes sense. Sometimes it does not. But counseling is the first step. Counseling with the counselor, counseling with me, going through the numbers, helping them understand. Then we do an application, and then we order the appraisal. And we also order title, and it's handled very much like a traditional refinance. And then we are able, the process usually takes 3 to 4 weeks. We look at the condition of the home. If we see water stains in the ceiling, if there's a shaky handrail, certain things need to be examined and potentially repaired before we can fund the reverse mortgage. In some cases, there's a little peeling paint that can be done after. Within 6 months, we can fund the reverse mortgage and you can use the money to pay for whatever repairs or maintenance needs to be done.
Very nice. Janice, you come across as a very caring person. I really like that from the very first time I met you. Let's give our audience a little bit, a fun, before we wrap it up. I have a list of 30 questions that are from various interviewer that I've collected from some research, and pick a number from 1 to 30 so I can ask you one of these fun questions.
I'll start with 11.
All right, 11. If they made a movie of your life, which actor would you want to play you?
Julia Louis-Dreyfus.
Oh, okay.
I
good.
love her. I love her. That's a
Very
definite.
Nice. Okay. So you see yourself more as a comedian, a fun, yes. Oh, wonderful. Very
For sure.
Good. All right, pick another number.
Let's go with the double, 22.
22. What technology do you wish you understood better?
Oh, that is interesting. What technology? I wish I understood web marketing. I wish I knew how to reach directly without being intrusive, without sending emails. I wish I could, flash a little information to people that I thought might need it or want it without intruding into their lives. So web marketing.
Yeah, I like it. All right, one more.
Let's go with 18.
All right, 18. What was your first paying job?
Well, my very first paying job, I was a babysitter.
Yay.
And I was a babysitter for 2 little girls in New Jersey. And 30 years fast forward, they live in Santa Monica. So do their parents. And I received a phone call 4 years ago from one of the little girls, who is now a grown woman. She said, I'm getting married and I want you to officiate the wedding. And I did. I went to the wedding and I got up and I introduced myself and I said, I am the 15-year-old babysitter for Deborah and Jerry. And today I'm performing the wedding ceremony of Deborah and her new husband, Michael. So it was very fun.
That's wonderful. Very, very nice. All right. Before we wrap up, something very important. When somebody needs a reverse mortgage, how do they get a hold of you? Tell us.
Well, they can either call me. My number is 888-740-9573. That goes directly to my cell phone. Or they can email me at jcohen, COHEN, @mutualmortgage.com.
Perfect. Janice, thank you so much. It's been such a pleasure to have you. And thank you for sharing a wealth of information with our audience. And we're going to wrap it up here. Thank you, everybody, for listening.
Thank you, Matthias, for having me.
Oh, yeah, absolutely. Absolutely. My absolute pleasure. We'll see you next time.
Okay.